Hello everyone, my name is Tony Farias and today I will be presenting an economic analysis on the costs, benefits, and how the labor market might be affected if a robot tax policy were to be implemented. All source information is listed in APA style on the last slide. In case you're really interested, I've also added source links at the bottom of each slide as well. In 1940, Senator Joseph O'Mahony championed the idea and wrote, "Men who work pay taxes. When machines come along and replace the workers, the jobless men are no longer able to pay taxes. Therefore, tax the machines in proportion to the number of jobs they are taking away." 81 years later, O'Mahony is right. As you see on screen, there is a large increase in robot installations in the workforce. As a result, companies no longer have high payroll taxes, and the government is losing a significant amount of income tax revenue with the decreasing amount of human workers. The main problem with taxing robots is defining exactly what qualifies as one. Mark Hirschberg, a venture capitalist, jokingly says, "Should we tax every tractor?" The broad definition makes it difficult for defining when a job is replaced by a robot and for how to tax one. Secondly, robots do repetitive jobs faster and quicker, leading to less waste, cheaper products, and greater profits. Therefore, a robot tax would essentially discourage automation and reduce productivity even more, which is really not a good thing. The third cost of a robot tax is that companies will be less willing to invest in new technology because they fear the extortionate robot tax. This will result in less development in the tech sector. Now, let's get into how a robot tax might benefit society. According to taxpolicycenter.org, 50% of federal government revenue comes from individual income taxes, something that robots are not currently responsible for. That is a benefit for companies using automation, but that tax revenue must be made up somewhere else. Another benefit is that it would potentially reduce the rate at which jobs are lost to automation, keeping more people in employment for longer. If robots and humans cost the same amount, current tax policies make robots cheaper to employ. Paying no payroll taxes on robots, businesses can accelerate deductions for capital expenses with no indirect taxes on them. Thirdly, a robot tax could lead to a universal basic income, which proposes that all citizens receive a regular sum of money that covers the basic living costs. This would provide people with an economic baseline and would allow for more safety and time to pursue options that work for them. As I said earlier, the majority of federal government revenue comes from individual income taxes. In addition, payroll taxes are also a large part of that revenue. Therefore, the big winner in a robot tax policy is none other than the government, because automation is essentially a loophole for companies. The second big winner is those workers and jobs at high risk of automation. Right now, according to an article on CNBC, 25% of American jobs are at high risk of automation, which will hit certain people harder than others, including low wage earners and men. All those industries you see listed on your screen would be winners if a robot tax policy were in place. In addition, another major winner is the future of young employees like myself who will be unable to find work as a result of the displaced jobs with the large rise in automation. The future generation must be taken care of, and a robot tax would do so. Moving on to the losers. Business owners would be hurt the most if their company primarily profits from replacing humans with robots. Such a policy would level the playing field and put pressure on these business owners to find human labor that is most likely going to be cheaper. Another loser is the tech companies who develop the robots that replace human workers. If an extortionate robot tax policy were in place, those technology businesses would be less willing to produce new products because they would not bring in the amount of profit as a result, which will lead to more human labor. According to Investopia.com, the best tech jobs pay significantly more than the average median wage and have projected growth rates that are faster than the 11% overall rate anticipated for the average US job. Therefore, with a robot tax, these jobs may decrease as companies are no longer making big profits from automation. Onto the labor market analysis. With robots being more productive and cost significantly less in corporate and payroll taxes, the demand for human labor is decreasing. Therefore, companies are able to maximize profits as a result. A robot tax would simply, like I said earlier, level the playing field and increase human labor demand, since it will be a cheaper alternative. As the demand for human labor increases, the wage gap will also decrease accordingly, as skilled and unskilled workers will be in high demand, with companies no longer willing to invest in more robots. Finally, the additional robot tax revenue can be used elsewhere for the government while still benefiting from the income and payroll taxes allocated through human labor. Now, as a child of two parents who work in sales, I'm not going to sugarcoat things when trying to convince stakeholders that this policy can benefit them. Robots are more productive and they cost a lot less than humans in the workforce. Although, regardless, humans have the ability to think critically, communicate effectively, and have emotions such as empathy. Humans are able to relate to and understand each other in many ways that robots are unlikely to achieve anytime soon. Don't get me wrong, the future is in automation, but companies must understand that human labor is invaluable in some cases. Therefore, while companies are making big profits with the current tax loophole, a robot tax would simply encourage more businesses to increase human labor. Overall, after about 10 weeks of research on this topic, I truly believe both the government and companies employing robots will benefit in the long term. Big profits will be lost in the short term, but the future generation will begin specializing in certain industries and offer companies more enhanced skill sets as a result.